let's be honest. Life insurance can feel like this massive, super complicated puzzle, right? Well, today, we're going to change that. We're going to break it all down, piece by piece, so it makes perfect sense. And we'll be using some fantastic insights developed by Dr. Sudhindra S.G. to guide us through. But before we dive into all the different types of plans, I want you to think about something for a second. Just a quick question. What do you think is your single most valuable asset? You might be thinking your house, maybe your car, or some other investment. But actually, it's something way bigger. It's what's called your human capital. That's just a fancy term for your ability to get up every day and earn an income. That power is what everything else is built on. And that right there is exactly what life insurance is designed to protect. So here's our game plan. First, we'll talk about why this is all so important. Then we'll get into the building blocks, starting with term insurance, then whole life. After that, we'll look at plans that are great for saving, how you can customize your own policy, and then we'll wrap it all up with the most important takeaways. Let's do this. All right, let's jump right into our first section. Why are we even talking about this? What is the core reason, the real purpose behind life insurance? When you boil it all down, life insurance is really a promise. It's a financial shield that you put in place to make sure that the people you care about are okay financially if you're not there anymore. It's all about creating a safety net for life's biggest what-ifs. And beyond just protection, it can also be a really powerful tool for saving and building wealth for the future. Okay, so let's get into our first type of product, which is really the foundation of the whole thing, term insurance. The best way to understand term insurance is to think of it like renting an apartment. Seriously, it's a great analogy. When you rent, you get shelter for a specific amount of time, a year, maybe 2, and the upfront cost is way lower than buying a house, right? But you're not building any ownership. Term insurance is the exact same idea. You get a huge amount of protection for a set period, say 20 or 30 years, for a very affordable cost. It's pure, simple protection for when you need it most. Now, term isn't just one thing. There are a few different flavors. For instance, there's decreasing term. Imagine Mr. Ravi just bought a new home with a big loan. This type of policy is perfect because the coverage amount actually goes down over time right alongside his mortgage balance. Then you've got increasing term, which does the opposite. The coverage grows to make sure inflation doesn't eat away at its value. And there's even a cool one called return of premium, where if you outlive the policy, you get all your money back. Pretty neat, huh? Okay, so if term insurance is like renting, what's the insurance version of buying your own home? Well, that leads us right into our next section, whole life insurance. Whole life is pretty much exactly what it sounds like. It's permanent insurance that covers you for your entire life. The payout is guaranteed, no matter what. But here's the real game changer. It comes with a savings account built right in, called the cash value. A piece of your premium goes into this account and grows over time, usually tax deferred, which is a huge bonus. You can even borrow money from it later on if you need it. So who's this for? Well, it's a great fit for people who want that rock-solid, lifelong guarantee and are comfortable with the higher premium. It's for anyone thinking about leaving a legacy for their kids or even looking for another way to build up a nest egg that they can tap into during retirement. It's all about building a permanent financial asset. So we've covered pure protection, that's term, and lifelong ownership with whole life. But what if you're looking for something that's kind of a hybrid? A policy that not only protects you, but also helps you save for a specific goal? Well, that's where endowment and money-back plans come in. An endowment policy is like a supercharged savings plan that has a life insurance component attached. Here's how it works. You get a guaranteed payout on a specific date, let's say in 15 years when your kid starts college. If something happens to you before then, your family gets the money. If you're still around, you get the money to pay for tuition. It's a win-win, ensuring the money is there no matter what happens. Now check this out. This is a variation called a money-back plan. Instead of waiting for one big payout at the end, it gives you payments along the way. So with this 20-year plan, you'd get a chunk of your money back every 5 years. And here's the amazing part. Even after you receive those payments, if you pass away during the term, your family still gets the full original coverage amount. It's a great way to have some liquidity while still being fully protected. Now, with these savings-type plans, you've got a choice to make. You can go with a participating policy where you can actually get bonuses, kind of like dividends, if the insurance company does well. So you get to share in the profits. Or you can choose a non-participating policy where everything is guaranteed and fixed from the start. So you have to decide, do you want the chance for higher returns or do you prefer the comfort of a sure thing? Okay, So you've picked your base plan, but life has a lot of curveballs, right? What if you want to add extra layers of protection for very specific things? Well, now we get to the really fun part, customizing your policy with something called riders. So what's a rider? It's basically an optional add-on you can attach to your policy. For a little bit extra in premium, you can plug in all sorts of additional benefits to cover specific situations, turning a standard policy into something that's perfectly tailored to you. And I love this analogy. Think of your main insurance policy as your pizza base. It's solid, it's the foundation. The riders, those are the toppings. You get to choose what you want. You want extra protection in case of an accident? Add the accidental death rider. Worried about a major illness? Add the critical illness rider. You get to be the chef and build your perfect protection pizza.
All right, we've designed our perfect policy pizza. So before we go, let's just quickly recap everything we've talked about and boil it down to the key things you really need to remember. So here's the bottom line. Term insurance, think of it as renting protection. It's affordable and covers you for a set time. Whole life insurance, that's owning your protection. It's for life and builds cash value. Endowment plans are your savings-focused tools for hitting big life goals. And finally, riders are your custom toppings to make the policy a perfect fit. Every single one is a different tool for a different job. And that really brings us to the final and most important question. Now that you know what all these different tools are, you can ask yourself, which of my family's dreams, which of my life goals need protecting? Figuring that out is your very first step to building a truly secure financial future.